Welcome to the Money Mastermind Show. Let's talk money.
And welcome to the Money Mastermind Show. Tonight, we are talking financial gurus. More specifically, why you shouldn't necessarily listen to them. Joining us for tonight's episode is Joe Saul-Sehy of the well-known and respected Stacking Benjamins podcast. Not to be confused with a financial guru, by the way.
Yeah.
Thank you for joining us, Joe.
Thanks a lot for having me, guys. I feel this is a party, and I'm glad to be on it.
And of course, we have the other members of the Money Mastermind Show. We have Miranda Marquette of Planting Money Seeds, Peter Anderson of Bible Money Matters, Tom Drake of the Canadian Finance Blog, and Kyle Prevost of youngandthrifty.ca. He was unable to make it tonight. We miss him. And I'm Glenn Craig of Free From Broke, and I'll be your moderator tonight. I'll also slow down my speaking so that we can all keep up. Before we start, I want to direct you to our event page. If you're watching, there's an app there where you can ask questions. And if you have any questions about financial gurus and if you should listen to them, why or why not, please post it. We love having questions here to answer. So back to our topic, financial gurus. These are the guys, the gals that you see on TV, in the media. They've got books. You see them in magazines. They might have, who knows, they got all sorts of stuff out there, multimedia. And they all are telling us how to solve our financial problems. Not too different already in topic of what we do, but it's different. There's no shortage of them out there. We love to watch them, but the bigger question maybe is, should we be listening to them? Is what they're saying applicable to everybody? I think as part of the podcast and financial blogger community, every one of us has probably heard or been part of some conversation where somebody said, I heard such and such say that you should always do this or you should do that. And then maybe they ask us or they say that this is what they've done. And should we listen to their advice? Should we? I mean, I know I hear it, and sometimes it's like, oh, yeah, that's good. Other times I kind of cringe and go, well, no, maybe not.
Well, see, we need to start with Joe because Joe is kind of a financial guru because he's been in the system. he's one of them. He's been
tainted.
I'm just going to hit my head on the mic now. Get that over with. Yeah. You know, I think, and I'm glad we're talking about this because I wrote this white paper on the topic. The financial gurus to me are really great, actually, and they do a great service. I don't think actually there's anything wrong with the gurus themselves. I think there's a big problem with two things. Number one, people that say, you know what, I love Dave Ramsey and I don't listen to anybody else. I think Dave Ramsey kind of wants you to follow his advice and then graduate, you know? I mean, I had teachers, I've had mentors that I followed, and my best mentors are people that wanted to see me climb as high as I could with their advice and then go to the next level. So I think Dave Ramsey's got some stuff that's great. Jim Cramer. I think the bigger problem has to do with us. Like I don't know about you guys, but I've met people that watch Cramer all night, and they're talking about individual stocks. I was at this party, actually, and I'm talking to this guy. He's like, yeah, so I'm watching Cramer, and he's telling me about the stock I need to buy, and I'm thinking I'm going to buy it because it's going to do this. He's got this whole upside-down teacup thing, right, where when the stock goes up and then it comes back down like a teacup and then it makes the handle, that means that it's time to buy. And I'm sitting there with my glass of wine, and I'm going, well, that sounds really great, but so how much money are we talking about? And the guy's like, oh, I'm getting ready to start. And then it turns out that he's got a bunch of debt, and he's nowhere near starting. He shouldn't be listening to any of this stuff. He should be listening to somebody like Dave Ramsey getting out of debt, you know?
What I love is the way you said the guy was like, he's telling me. And I think part of the issue is you get this connection. You feel this connection to this financial guru. You're watching them all the time. This guy felt like Jim Cramer was giving him advice. He was talking to him. Yeah. And I think we kind of do that. We're like, oh, well, hey, Dave Ramsey's helped me get out of debt. I am debt-free because of Dave Ramsey. And you have this connection. You like him, and it's good stuff, and you have loyalty, and you don't want to move on because you have this affection for them and their advice. And so you might be ready for something else, but you don't want to move on.
Yeah.
Yeah, I think it kind of makes a good point there as far as a lot of times these gurus, they're entertainers first. They're really good at what they do as far as being engaging personalities. Yes, they can be financial experts as well, but first thing that they do is they entertain people. So that's something you really kind of have to take into account. A lot of times maybe they're not the best person to be advising you on your finances, or maybe the advice that they're giving isn't well suited towards you.
I mean, do you think it's always fair to call them entertainers, though? I mean, they certainly, once they're on TV and they have their own show or maybe even a radio broadcast, their goal is pretty much to bring in advertiser dollars. I mean, let's face it, any TV show that's on, that's going to be their primary goal. I mean, that's a criticism of even the news today, that's the goal, to bring advertising dollars. So they're going to do whatever they can to make sure that they stay on the air. And that's going to be to entertain, and that's kind of a good thing, because part of what we watch, we love watching Jim Cramer because he's so animated and he's screaming and yelling, Suze Orman is telling people, no way, whatever.
Denied.
Denied.
Yeah. So I mean, we kind of like that part, but I don't think all of them started off as entertainers, right? They didn't always have that initial reason to be there. So I think that I mean, like Joe was saying, there's good to what they're doing too, right? It's not always just the entertainment aspect of it, but I think that when you're watching something on TV, no matter what it is, you have to sort of go into it with a grain of salt.
Yep.
Yeah, they wouldn't be there.
Yeah, personally.
Go ahead, P. All right. I don't think they'd be where they are if they weren't entertaining. I was the Channel 7 money man in Detroit on twice a week, which was nothing compared to these gurus. And I'll tell you, if I wasn't entertained, the producer of my show when I first started didn't say I gave great advice, didn't say you speak great financial speak to my audience. You know what they said? You talk about money like the mechanic talks about cars, and we really like that. That's what they said. I mean, it had nothing to do with the quality of advice I was giving. It was that I could tell a story and I sounded like a dude repairing your car. I don't know if that's a compliment or not, but it kept me on the air for 9 years. So.
You were probably better than most people's mechanics.
So here's what you got. You got this broken mutual fund.
That actually sounds pretty good.
Thank you.
Let's have some more of that, Joe. So we have a question here already from Sandy Smith, and she's asking, what's the difference between what we do and the gurus? Because we all have our own platform to speak out there. We have our blogs, we have our podcasts, and we're certainly disseminating advice to people. So where does that line cross between what these quote-unquote gurus do and what we do?
I don't know.
What is the guru?
I don't know if we should be taking questions from Sandy, first of all. Sandy, stop it. But
yeah.
But number two is that I think there's a big difference. What I like about the trend in podcasts and in video podcasts like yours, I mean, when I watch the Money Mastermind show, you guys are having a discussion, and often you tell people right up front, we just like talking about money. And on our show or Listen Money Matters or whatever show, I like this trend of people talking instead of the guru who's on the top of a mountain, telling the masses exactly what they need to believe. I think I don't know about you, but I think a lot of people are pretty sick of that, and they like this format better, which is why it's growing.
So you'd say a key distinction is when you have the person saying, like, this is what you must do, like, this is the only way to do it. What I'm saying needs to be the financial gospel.
Yeah, I'll give you an example. Dave Ramsey. I mean, because Dave Ramsey's an easy target.
I was just going to say. Just a great little bullseye on him.
When it comes to getting out of debt, there's nobody else you should listen to. Studies have shown that even though the debt snowball is not the most efficient way to get out of debt, it works because it fits with human behavior, right? We do it because of the fact that it mixes with our brain really well. There's more efficient ways to do it. But when it comes to investing, or even people that know a lot about money, I think once people have a basic understanding of money, they understand the value of leverage. And while I think that the masses that Dave Ramsey talks to should never use leverage, to tell everybody on earth that leverage is a bad thing is pretty bad. You don't see the top guys on Wall Street saying that leverage is bad. I mean, some very rich people use leverage responsibly to get ahead more quickly. But I think you need the Dave Ramsey lesson first. You got to have that one first before you get to the leverage level.
And I would say there's not a huge difference between us. I mean, we're not going to turn you down if you want to advertise on this show. But
we're looking at you, Mr. Big Corporation, with the mouth
right.
to the pocket.
I think.
No, I agree with that, Mary. Yeah.
I think the difference is that we just don't reach as wide an audience, and we have a very specific set of people that come and read us or watch us or listen to us. But I think to a certain degree, we're kind of the same, because we're putting it out there, and what we say isn't going to be the right thing for everybody. And if everybody tries to do exactly what I tell them to do, a lot of them will fail. I mean, let's be real. A lot of the things that I decide to do with my money are things that most people probably should not be doing with their money. So the way I use my credit cards during the summer and the way I buy new cars with loans, works for me, but it's not going to work for everybody. And so I think that's kind of one of the ways, like you were saying, is that when you get into this mindset where, everything that they say is gospel and I have to do everything they say and only what they say, that's the problem. And it kind of, you get caught up in this cult of personality. I think the main difference between us and these gurus is we just don't have the audience.
But Miranda, sometimes when you say you're doing something a certain way, you're also going to say that this isn't for everybody. With a guru, they got to kind of draw the line in the sand, and you can't go on Oprah and say, well, do this, but maybe you should do this. You got to be a little more absolute. So that's where sometimes the gurus don't always apply to everybody, is that they've got to kind of have this one character version of how to do things, and that's the one right way because they're the expert.
And right, yeah, and I don't think. Sorry, Peter. This is kind of what we do every episode, where me and Peter sort of jump in on each other. But please go ahead, Peter.
I was going to say, that is kind of a function, I think, of these gurus, is they're speaking to such a mass audience that a lot of times their advice can be kind of one size fits all, what's going to be best for most people. And that most people might not be you. So I think it's really incumbent upon the financial information consumer, people that are looking for help, to be researching these things and educating themselves a little bit so that they know whether or not some of these things are in their best interests. It's also, like Miranda was saying, I think in some ways bloggers and podcasters and the gurus all have a similar commercial interest in some of these things sometimes. Dave Ramsey and his group, they have their endorsed local provider program where they're sending out leads to these local providers that are financial advisors and insurance agents and so forth. But those people, they pay referral fees to be one of those ELPs. So there's kind of a financial interest in it for him there. Dave Ramsey also has his name on all sorts of products, from insurance to a mortgage company to a gold buying company that he, lends his image to. So he has a financial interest in a lot of these things. And sometimes a lot of these people that are following the gurus are just going to think, okay, yeah, this is the best possible product that I could be using because he's telling me to. When in reality, they're not always the best products. By the same token, a lot of bloggers and podcasters may talk about products that are good products, but a lot of times there's a financial interest in that as well. Maybe they're making affiliate income from people that sign up for these companies, or maybe they're sponsored by this company or whatever. And, we try to disclose that information, but a lot of times it may not be as apparent as it needs to be. So, again, it comes down to that consumer needs to educate themselves, and they need to be going in with kind of a critical eye.
So, I mean, that kind of leads me to one of my questions here. Are all the financial gurus the same? You know, if we see somebody on TV, what's the difference between them, and who do we know that maybe we should listen to this one or not listen to that one? Because sometimes they don't have their own shows, but maybe they're on the Today Show or Good Morning America, you know, like their go-to person. You know, there's all sorts of people who are out there that are kind of like the face for some media telling you what to do with your money. And I've watched some of them, and sometimes it's like just the most basic advice, and you just sit back and cringe and go, shit. So how do you know? Like, what's
what?
Yeah, transcribe that. How does the person watching know what to listen to and who to listen to?
I actually had a problem with that when I was a financial advisor, which was that somebody would walk into my office and they'd say, hey, I saw the Motley Fool guy said this thing, so that's what I did. And sometimes it was the perfect thing to do, and other times I thought, oh, that's horrible. So guess what I'd do? When I was young and stupid, the first thing that I would do is I would jump all over the Motley Fool guys, and I would tell my client about how bad that was and how rotten it was that they did what the Motley Fool suggested. Well, these guys have this huge megaphone, and I'm this little advisor in Detroit, right, who's this pipsqueak kid. So they didn't get rid of the Motley Fool. Guess who they got rid of? They got rid of me. So then I had to figure out a way to disagree with the Motley Fool guys in a way that I could keep my job because I like to eat. So it would take me like 20 minutes, and it's funny because finally I came up with this way to describe how to kind of self-sort, Glenn, to answer your question. And it's funny because it was actually a video game that my kids were playing called Kerbal Space Program. And you can find it out there. It's still in beta. They call it beta than ever. The program is about these little green men, and you put them in this spacecraft, and you try to get them into outer space, and you try to go as far as you can. And what's cool is about this program, by the way, as an aside, is that NASA found them. They didn't find NASA. NASA found them and said, you people are teaching our kids so much about space that we want to partner with you. And now NASA partners with this game, Kerbal Space Program. So what's cool is what I learned playing Kerbal Space Program is that to reach outer space, I needed a 3-stage rocket. Like the Apollo space program, you know, I needed these 3 because I didn't have enough gas. It's probably not called gas, jet fuel. I needed enough fuel in each stage to get to outer space. So it was amazing how I learned this through trial and error, that I needed a solid launch pad and to get off the launch pad, which took me forever to figure out how to do. And then I needed to jettison the first stage when it ran out of fuel, so I had 2 stages, and then the 3rd stage that was going to take me to Mars. And then all of a sudden I realized, as I was goofing around with this silly game, that this is gurus. There are gurus who are best for people who are on the launch pad of life. I think that Suze Orman, who talks about like a healthy respect for $1, the best thing I've ever read about Suze Orman was like the first chapter of her first book. Everything after that, not so much. But that first chapter is just brilliant because she talks about healthy respect for money, and how often do we see people where money just goes through their fingers because they have no respect for it. And so Suze's a great place to start. And then David Bach talking about track your expenses. You know, track these little things. The latte factor, which I make fun of all the time because I don't think the latte factor gets you rich. But if you're on the launch pad, if you're somebody that's on the launch pad, it's a great thing. And then so I think gurus are kind of go in stages. And the Motley Fool guys, they're those guys who are going to Mars. That, you know, it's very dangerous, some of the things that it says to do on the Motley Fool with individual stocks, or some of these real estate, no money down real estate people, right? You can make a bunch of money doing that, but if you're wrong and you're already outside the atmosphere, you're probably going to die. So I don't know if that's I don't know if that's too dorky for what we're talking about, but I already said it. So
I think you make a great point, and I know when my personal finances were kind of like, you know, not great. Let's use that as what we're going to call it. You know, you don't know where to start looking, so you try to grab onto something, and just a lot of these people that you mentioned, that's kind of like where I went. You find the popular books that are there. Motley Fool is probably one of the first sites that I found way back in the day before bloggers really kind of took hold. And they do have a lot of different advice. They certainly have, you could go crazy listening to their stock advice. It goes all over the place, and you have to really be prepared for that. But they have a lot of like standard advice to start out with too that you can find, like a lot of articles on there. At least it was when I was there. At least they had a free section of it. So it is good to get into these guys just to get your head around some of these concepts and ideas of what they're saying.
Yeah.
You know?
No, I think though, if you have a framework saying, okay, which stage is this person for? As I'm reading the guru, I can start sorting out. Okay, he's talking about individual stocks, or he's talking about real estate. That kind of sounds like going to Mars, you know, versus Launchpad or somebody who's just trying to see the world, you know.
But I think, Joe, you come with a little bit more of a financial background than most people, and you could see that. I think a lot of people, when they watch this entertainment on TV, they don't necessarily know that, you know what, I may not be ready for Jim Cramer yet, or parts of the Motley Fool, or this one or that one, or, you know, they may not realize where they are and how it's going to fit with what they're watching. You know, why should what they're saying fit with my personal finances? And I think that's where a lot of the disconnect comes in too.
Oh yeah, that we're looking at the wrong. We're the wrong audience, and we don't know it. We don't know we're the wrong audience.
Right. I mean, like, Jim Cramer is entertaining to watch. I mean,
sure.
If I could have one day where I'm just half as animated as him, people would think I was doing all sorts of illegal drugs. Because it's just not me.
Oh no, you're like the most zen person I know.
That would be so
just like to sleep. But just have a half a day like that, right? But you're right. Like, if I started going in and trying to buy and sell stocks, you know, over this amount of time with very little research, I'd get killed.
Yeah.
And I think that's probably the case for most of us too. And you know, I think a lot of what he says isn't necessarily for any audience. I think you watch him just to kind of like to listen to him, but you know, most people probably shouldn't act on his stuff at all. I mean, I'm just going to throw that out there.
No, Glenn, but that's what's funny. They say it at the start of every show, and people forget that. At the start of Jim Cramer's show, there is a disclaimer that says, don't act on any of this stuff, right? and by the time he starts talking, you've totally forgotten it. I mean, it says, ask your financial advisor about what fits with you. And then Cramer comes on, and you've forgotten the disclaimer completely. But every time he's on with his show, it says that.
That's funny. I don't know that I ever see that. I'm sorry, Peter.
No, I was going to say, I think it really comes down to far too many people are just willing to accept whatever somebody tells them, basically. They may be kind of lost and not sure where to go, and the first guru or whoever comes down the road, they decide to jump on that train and see where it takes them. But maybe they would be better off if they were to maybe ask around to family members or trusted friends or whatever. Maybe some of them have been through a similar situation where they've been able to get out of debt or are investing, and maybe they can give you some suggestions of places to look as well. You know, don't just jump on the first thing that comes your way. Do a little bit of research. Talk to family and friends. Maybe talk to a financial advisor who can kind of point you in the right direction as well.
There are some clues. I mean, if Cramer's talking about individual stocks and he's talking to the CEO of a company about whether it's a buy anymore or not, right? And I've got $35,000 of credit card debt at 21%, and I'm watching that. I have to have the brain power to think this might not be for me.
But you see, I don't know that everybody necessarily thinks that way, because maybe the person's going, you know what, I'm 35 grand in debt, and maybe they've got that gambler's mentality going,
right.
How do I get rid of that debt? If I put it all on Apple tomorrow, you know, I'll roll a dice on the iWatch, and then all of a sudden that debt's gone.
Could all go away. Yeah.
It could all go away, and that's the problem too, right?
Shouldn't you just buy a lottery ticket? I mean,
it's all the same mentality, yeah.
That's what I'm saying, right?
Yeah. I'm going to double my money or more, and then I'll pay off the debt, yeah.
I like to think that stocks at least have a little bit of a better shot than the lottery. Otherwise, I think we're all in trouble. But I think taking random advice from somebody might be equivalent of putting your hopes in a lottery. But I think you said a point too, also, Joe, in that, you know, not every show is for every person. but I don't think every show necessarily has that disclaimer, like, you know,
No.
watch this show, but only, you know, if you've done A, B, and C and D, you know, then maybe you could come back to me.
No, because they're all about ratings, right?
And it's not necessarily their job either to say, you know, don't watch me, or you know, make sure you do all the stuff first. You know,
could you imagine the TV show that says, don't watch this?
This is not for you. Turn the channel.
Our advertisers back here said, this sucks for you, right?
Hey,
you just totally reminded me of like when you go to get something like from somebody like from Meat or something, they're like, don't buy my course unless you're debt free or whatever the crap it is. You see that stuff, and all it does is like make them go like, no, I want to buy the course now.
Right.
You're not cool enough to watch our stuff.
That's right.
That wouldn't actually work for this show. I think people would probably listen to us and not watch. But for some people, it might actually come across as like a dare almost. Is there anybody in general that you should put your full faith in your personal finances with?
No.
No.
I mean, I'll just go first. You know, my whole thought as a guy that was in the trenches for 16 years is that my job is never to care about your money as much as you do. And I saw too many people that wanted to hand over their money to some guru or some guy or some woman just so that they could think about other stuff. And then they really just wanted somebody to blame, you know, when stuff went wrong. And which is sad, because it actually is fun once you start learning how it works. And you should work with advisors and with gurus, but you should use them to get that knowledge more quickly. I think that's the key to a successful relationship, is not to give it away, but to use them to go faster. You know, the smartest people that I worked with that were CEOs of companies and really smart people, they used me to get information more quickly so they could make decisions. They could just cut to the chase more quickly. That was my job. My job wasn't to tell them yes or no. My job was to have an opinion and to be pretty Gordon Ramsay about it, you know, tell them when I thought they were stupid. But besides that, it needs to be your decision, and then plug in the gurus that fit the decision. And that's where I think we get it wrong. I mean, our whole discussion is we see a guru on TV, we see Dave Ramsey, and we think, oh, that fits for me. But we listen to what Dave Ramsey says first. I think we got to first start with ourselves and look at, okay, what's my cash flow look like? What's my balance sheet look like? And like what Peter said, then we go and we ask our friends, hey, who's a guru that covers this? You know, who's somebody that covers that type of thing? I've got all this debt. Oh, you got to listen to Dave Ramsey. Then you're right on. Or, you know, I'm thinking about buying stocks, individual stocks. Well, you got to listen to the Motley Fool guys or Cramer, you know.
Yeah, great points. But I think that's it. I think we sold. You know, well, I think you also have to question everything. Right? If you're giving me an answer, why are you saying this, and how does it apply to me, and does it apply to me? And I think on a lot of these shows, you'll see somebody call in or be on the show, and they give a situation, and then an answer is given, and you don't really know the whole situation. You know, should I buy this? I have money saved. Okay, you have money saved. But do you have debt? Do you have retirement funds? Do you have this? Do you have that? And most of us don't know that situation. I mean, we talk about keeping up with the Joneses. You know, you see that person buy the car down the block, and you're like, why can't I do that? But you don't know their situation. And I think a lot of times we see these answers come through, and you don't know everything that's going on, and you think that just because the answer is right for them, and it sounds similar, that it should be right for you too.
Well, and the other thing is we don't know what their goal is. A lot of the time we have no idea because some people want to go to Mars, and other people say, oh, I don't want anything to do with that. That's scary. You know, they're no, thank you. I just want to get all the way to the top of the atmosphere. I want to see this beautiful view of the world. You know, then I want to parachute back down. And for somebody like that, like I talk to CFPs all the time who think that guys like Cramer or these no money down real estate people, that they're horrible because a CFP, the whole CFP thing is to make sure that you don't take a lot of risk. And so let's follow the 6 areas of financial planning and spread things out and be as safe as we possibly can, which is why somebody that wants a great view of the world but doesn't want to go to Mars, then they should listen to somebody like a Rick Edelman, you know, or a Gene Chatsky. somebody who is going to teach you how to index, do indexing, have a good tax strategy, have great insurance, and then live your life doing whatever other thing it is that you want to do.
Yeah. So, I mean, Jean Chatzky was kind of one of those where, does she fit into the financial guru? I see her on the Today Show giving advice sometimes or wherever she's at, but it's a fine line on who to listen to and when and why also, I think. And that becomes
I think though, with any expert that you're dealing with, whether it's a Dave Ramsey, a Jean Chatzky, or one of our websites, the key is to trust what they're saying, but verify. I think the old saying is trust but verify. Take in what they're saying, but verify for yourself, educate yourself, and figure out for yourself if that's true. I went through the Dave Ramsey whole Financial Peace University course myself and actually helped to teach it one time as well. It basically got me thinking about a lot of these topics about debt and investing and so forth, but I didn't just take everything Dave Ramsey told me at face value. And I don't really agree with a lot of what he says as far as investing goes. But he did get me thinking about that stuff. I listened to what he had to say, took what I liked, and some of the stuff I didn't like, I put that to the side and formulated my own opinions on those topics. So.
Yeah, I'm not sure if it was you that said it, Peter, that everybody just wants to have somebody tell them what to do with their money, right? They just want the quick answer. Tell me, what do I do? Okay, this is what I'm going to do. But I think personal finance in general just isn't that cut and dry. I think you have to take that vested interest yourself in what you're doing, and then you could kind of make this judgment call on whether this advice is good for you or not. And I think too many of us don't want to deal with that, and maybe that's kind of a big issue too.
I liked Joe's point about looking for someone to blame. I think none of us want to be the one that screws up our own life. But if we could say, oh, well, I did everything Susie said, or if I did everything Dave said, I went through Financial Peace University. Why don't I have the perfect life that I want? And you can find those ways to put it off on somebody else and say, well, I did what I was supposed to do. I read Psych Yourself Rich, and why am I not rich? And so you just you can kind of put off the responsibility, I think. And I think it does go back. I mean, personal finance is that old thing that we all say, oh, personal finance is personal. And it really is. And you have to go back, like Joe was saying, and start with you and say, well, let me look at my life. Let me look at where I am right now. Let me look at where I want to be. And now I'm going to go and sort of look around and see who offers me some information and be prepared for the fact that one person probably isn't going to give you everything you need. And you're going to have to go to multiple sources.
I'm laughing and talking because David Bach was just on our podcast, and he told this great story about how most people think Automatic Millionaire was his first book, and he said it wasn't his first book. I think he said it was his fifth book. And in the first 4 books, he had like 7 ways to do this and 5 ways to do that. And people kept coming up to him on stage when he was giving speeches, and they'd say, okay, I don't want this 7 ways or 5 ways. What's the one thing, right? What is the one thing? And he's like, and he's pulling his hair out. He's going, there is no one thing. There's 5 things. There's 7 things. And they're like, no. I don't want any of that. I just want the one thing. So then he wrote the Automatic Millionaire to be track your expenses, right? Just track your expenses, make things automatic, and you will be a millionaire. Done. He's like, so I gave people what they wanted, and it was the New York Times bestseller. I was on Oprah for the first time. Like all of a sudden, when I gave people the one thing, so he even treats it like it's kind of like his biggest book is kind of,
That's funny. So I wanted to do something here and maybe throw out some of our favorite or well-known financial gurus. And, just for the audience out there, just talk about maybe one thing that they really do well, that's beneficial, and maybe something that's really out there that maybe, this is why you don't want to always listen to them. And anybody who has information on these guys, feel free to chime in. But let's start with, we mentioned him a lot here today, Dave Ramsey. So something that's good about him, like where is he a benefit to people?
getting out of debt.
Yep. Having been through his class and helping to teach and everything, he's very good on debt and getting out of debt. If you sit through his class, they have these video lectures that he gives to, and he's so entertaining and very motivating when he's giving these classes. So if you're in the process of getting out of debt, I think he's one of the top people that you should be looking to.
The fact that he's been there and he can identify with you, I mean, he very much speaks from personal experience, which is very powerful.
And what that he preaches, maybe not preaches might be strong, but that he talks about, that maybe we should kind of take with a big old grain of salt.
12% stock market.
12%, yeah. 12% returns.
There it is.
Yeah.
Why not? Why can't I expect a 12% return on the market? The air quote
I love
market.
the look on your face there where you're just like, yeah, right.
Disappointing retirement.
Well, let's face it, the market, I don't think we can expect that necessarily from whatever we do, right? Not sure where he comes up with that particular figure, but
well, he says he comes with it from American Fund's performance, which is true if you look back at some of their big funds over long periods of time that they've done that. But you know what? As a guy that used to help people create the financial plan, I wanted to hope for 12, but we planned on 7 or 8. You know, because if we plan on 8, guess what we do? We end up saving more money. So if I save more money, do the thing that I'm in charge of, and save more, and then at the same time I get the high return. Now guess what happens? I have more money. But if I assume that I'm going to get 12, then I don't save enough if I don't get it. So don't want to do that.
Yeah, I don't think you want to go into investing with the expectation that you're going to have double-digit returns every year.
Right.
That's
hope for it, you know?
That'd be awesome.
Yeah.
I plan on like 5 or 6. That's what I base all of my stuff on, is like I'm going to get 5 or 6% return, and then I'm excited if I'm going to get 7 or 8. So.
I thought you were going to say 5 or 16.
Yeah, right.
Somewhere in that range, yeah.
That's right. That's why Miranda doesn't like 12. It's too low.
So how about another one? Let me throw out Suze Orman. What's good about what she espouses?
She's really good for if you're trying to get yourself under control and get that self-discipline and just sort of get the very basics of spending and income and trying to bring that in balance. And she's really good at saying, you know what, no, just stop, denied. And that's one of the things I do like. It is kind of fun to watch her just be like, no, really, no, stop. And she's really good for that kind of reality check where you're just like, oh yeah, no, I really shouldn't be doing this.
Some people do kind of need a smack in the head sometimes, don't they? Should I get that Rolex watch or pay the rent?
It is pretty funny to watch that, because people are very good at rationalizing if they want to buy something. They're very good at rationalizing the purchase and figuring out why it's a good idea. They never want to go into the why shouldn't I. So she's very good at getting people to take responsibility for their actions and take control of their finances, basically, and stop making excuses.
And she also does a pretty good job of saying people first. The money is important, but also, family and your relationships and people around you are important as well. And when you listen to this whole denied, should I buy it? Like you said, Peter, people have a way of rationalizing things. It's not a bad idea. You don't have to call up Suze Orman, but if you have a buddy or somebody that you trust, you might want to throw the idea off of them. And maybe you could get an honest answer there to help you out.
Yeah, I like her discussions around karma, like you're saying, Glenn. And also, she talks better about long-term care insurance and how important it is than anybody I've read. Like, she's got the argument down for long-term care and the reason why you need it and you should get it early more than any other guru I know.
That's a good point. I did read one of her books, and she had a whole chapter on that, and I was like, wow, this is something else I need to add to my arsenal that I haven't heard somewhere else.
Yep.
So what's not so great that she talks about that we should kind of maybe not always take as gospel?
Well, talk about the investing part. I mean, when she's talked about investing, she's talked about using government bonds, and the reason she can afford to do that is because she has a net worth that was in, 7 digits before she even had to invest money. So if you look at her asset allocation that she recommends versus for a normal person who doesn't make Suze Orman money, she might not be the best person to talk about that. I also think she can be mean. I'm sorry, I just think she can be so mean. I mean, so these people rely on her, and I don't know why anybody would go talk to her, because she beats the heck out of you. I feel bad for some of the people that she counsels.
She also doesn't care for bloggers too much either.
Yeah, idiots, all of them.
Yeah, because
they're all idiots.
For a little background history, for those who might be listening and watching, she did come out with, what was it, a debit card that she had that had some monthly fees attached to it that she had a financial interest in.
Yeah.
And Phil Taylor of PT Money, and also the creator of the Financial Blogger Conference, questioned this on Twitter. Like, why is this a good idea when, if people don't have money, why should they be paying this monthly fee? And long story short, she turned around and called him an idiot for questioning it, and kind of set a lot of people off.
It was a bad day for her.
I don't know if it was her or if it was whoever was
her
running
Twitter account.
Her PR person.
I think it's time for the world to take responsibility for their Twitter accounts. How about that?
That's right.
You say something dumb, don't blame it off on some assistant that may not exist. But that's one thing that a lot of people are a little rubbed wrong with her stuff. How about Robert Kiyosaki, Rich Dad, Poor Dad? I know a lot of people who that was one of their first personal finance books, and it certainly has had a lot of positive impact, I think, on people. So some good things that he's mentioned and talked about.
Well, reading that book was the first introduction to me of the idea that a home was the home that you live in, your primary residence, that you buy with a mortgage, not an investment. And that really has stuck with me. That's something that really kind of opened my eyes to a new way of looking at it, because when you go look for a house, the real estate agent's like, this is a great investment. And everybody's like, oh, it's an investment. It's an investment. It's really kind of a money pit by the time you pay all of your taxes and your interest and the repairs and the maintenance and everything else. For most people who live in most places in the country, the appreciation on your home is not going to make up for how much you spend on it, even if you live in it over 30 years. Yes, you will end up with a big chunk of capital at the end, but when you run the numbers and see, well, what did I really make on this after everything I've put into it, you're probably going to be lucky to break even, really. Because for most people who aren't living in Phoenix or in California and didn't buy their home in California 30 years ago, they're not going to see 5 to 10% yearly appreciation on their home. They're just not. Most people are going to see 2 to 3%. And if you buy a house during a normal time and you're paying a 4 to 5 to 6% interest rate on it, and your appreciation is 2 to 3%, and you're paying property taxes and maintenance and repairs and everything else. And can you tell that I hate the fact that I bought a house?
No.
That I never want to do it again?
I'm not getting that vibe at all.
I'm just regretting buying a house in Brooklyn in 1980. But I probably wasn't really ready to turn in my G.I. Joe figures for that. Okay, so Kiyosaki definitely, I think, made a lot of people look at their homes differently, look at their cash flows differently. Mm-hmm. What actually produces income for them. Are they working for their money, or is their money working for them? I think is a big part of that book. Some things that maybe you don't want to so much follow what he's saying.
Well, one more thing that I really like was, and you know what, this is not one of the main points a lot of people get from Kiyosaki, but the tax difference between your money working for you and you working for yourself.
Yeah.
The fact that your money will work much quicker for you than you can work for you was like a big aha. It made me go, I got to get some cash saved immediately, because I can spend all day at my job, and this other dude, which is my pile of money can do a much better job than I can because of the tax implications. That was really powerful. I think he makes small cap stock investing sound really easy. I think he makes it sound just like, talk about 12%. You're not going to do 12%. You're going to do Miranda's 18%. That's what you're going to do.
Well, now all of a sudden it's 18.
What else with Kiyosaki?
It's always real estate. Everything's real estate.
He does seem to make real estate sound so easy, especially in Rich Dad Poor Dad. I read that and I was like, where do I get me some? Where do I start?
Yeah.
And the book doesn't have a whole lot of like where to start, just that you should do it.
All you got to do is sign up for a $10,000 course. Bam.
There it is.
And in that course, he might have another course or another set of books and another, so on and so forth.
It's brilliant.
Follow the money.
It's a money-making machine for somebody, and it might not be you.
That's right.
Yeah.
I sat through a Rich Dad training. Okay, I went to a 2-hour free training, and all it was like priming you to buy the $1,000 3-day training to prime you to go on and buy the big course.
So I think if you ever want to really follow the incentive and why people are saying to do a specific thing, especially if it's something that's not like a general, like, buy a general ETF or something like that that follows the market. If they have a specific product that's theirs, follow that money and find out why. And maybe then you'll come up with some questions as to why you should or shouldn't follow their advice.
That's funny that you say that because, there's nothing wrong with real estate. I mean, I love real estate. I think real estate's a great investment. I think that it makes sense to get into it. But a few weeks ago, I had an argument on Twitter with a guy who's a real estate dude, believe it or not, who said that you shouldn't put money into your retirement plan, your pre-tax retirement plan, because that money's all going to go away. You need to put it all into real estate. And my answer back to him was, how do you get paid? You get paid when more people believe that they should put their money in real estate. Like I told my son, we sat one afternoon watching CNBC, and I said, watch all the people that come on CNBC. A guy that says growth stocks are awesome, he's a growth mutual fund manager. The next person says you need to invest in China. Guess what? Their mutual fund sells China stuff. It's incredible. We're all hawking something, right? So once I totally agree. Once you know where the paycheck's coming from, then you can do the grain of salt that you were talking about earlier.
And like you said, it's not all bad. Real estate in itself is not a bad thing. And if you could do it well and do it the right way and you're prepared for it, you can certainly do quite well. We had Brandon Turner of Bigger Pockets on, and he gave a great discussion on how he does well with real estate.
Yeah, and a lot of Kiyosaki's advice on how to do real estate is fantastic. Great stuff. Yeah.
But you do have to kind of know where the incentives are, too. Last one here, because we could go into a whole bunch of these people. Jim Cramer. What's good about him? Anyone?
Bueller?
He's fun to watch.
I'll tell you what I like about him. That guy can dig into the numbers of a company. He can dig into the numbers of a company, and I really like watching that. I also like his emphasis on looking for, he doesn't put it this way, I put it this way, his emphasis on looking for the next domino. In other words, everybody's looking at the domino that's falling now. Cramer's always looking at what domino is that going to cause where we should be investing tomorrow. And I really like that. When I watch him, I'm always looking for that part of his show because he has it buried in his shows, like what's the next thing? What is this going to cause? So if he talks about interest rates, what does that mean 3 months, 6 months down the road? I like that. That keeps my brain thinking about next dominoes, which I think is healthy for my investment approach.
Yeah, and I think he makes you aware of, he doesn't always go deep into it, but he'll go make you aware of what a company's doing and why.
Right.
And I think a lot of people don't necessarily do that on their own. We say, well, we should buy it because it's popular. Well, why? What's behind it? And he has access to that information that we don't. which is sometimes why we shouldn't listen to him, I think.
But he does talk about going into the numbers, about digging into the numbers behind a company. You know, don't just take the sexy annual report and what the CEO's telling you. Dig into the numbers behind a company, because he goes into earnings and profits and free cash flow and those types of things, which I knew nothing about until I really started, watching guys like Cramer.
So the not so good about Cramer, why you might want to avoid him for a bit or completely, depending on where your situation is.
Just the noise. There's always noise. It's always the end of the world. There's always panic. There's always...
BAM!
Yes.
It does have its special pace to this show that you have to kind of have a constitution for to watch, I think.
Even if he's giving a legitimate tip on a stock, by the time he's given it, you've kind of already missed the boat too. Like the amount of people that probably buy that day is, I'm guessing, is probably pretty crazy, and it's kind of too late by then. Like you're always kind of chasing the thing that's already been announced.
Yeah, have you seen those numbers, Tom? I mean, he moves the market. You're right on. Yeah. By the time he says it, you're done.
That's when you should be selling, if he's telling people to buy.
Well, which is why when I watch him, I like watching his thinking and the way he thinks about companies. I don't want to buy what he's buying, because and studies have even showed that some of the stuff that he recommends on the show lately, like the last year and a half, hasn't done all that great. So
it's sort of tainted when he mentions it on such a big market.
Yeah. But isn't that cool if you could do that? Like, you say something and the market moves? That would be awesome.
That is pretty awesome. Like, doesn't Warren Buffett have something of a problem like that? Like, if he starts to sell, it becomes an issue because he has so much of the market and he has to either push or buy so much that it really, like, shifts everything. That's nice.
Just one more thing about, did anybody else watch Arrested Development? Mm-hmm. And the big party they had when Cramer upgraded them from a sell to a don't buy?
Yeah. Yeah.
They had this massive party because now we're only a don't buy. I think that was great.
I got to get into that show.
Oh, it's a great show.
So funny.
So I think we've done a lot about financial gurus and maybe why you should listen to them, but there's a lot of reasons to avoid them as well, and to be careful. What we like to do on the Money Mastermind show is go around and do a final word, and each one of us will go around and we'll give a little summary of what we think about the subject. So Tom, we'll start with you. What's your final word on financial gurus?
Well, we've said a lot about sort of what they do wrong, and when they're doing something right, how you got to fit it into sort of your stage in life. But I think one of the best things they probably do is, if you're someone that's not even thinking about your money at all, and you just happen to have the TV on, and then someone's coming into your living room and they're getting you to start thinking about your money, not worrying about what the details are as much, but just the idea of, oh yeah, I should probably start watching my expenses, or I should start saving, like just that really basic stuff for some people that aren't doing anything, and just because they happen to leave the TV on, that might be one of their biggest benefits is just getting people to step one.
It's a great gateway drug of sorts into the world of personal finance, in a good way.
And then they can find the blogs, yeah.
That's a good place to look first, too. And Peter, what's your final word on financial gurus?
Well, my final word on the financial gurus is just, as I said earlier, to trust but verify. Listen to what they're having to say and start thinking about these topics surrounding your personal finances. And like Joe said, nobody cares about your money as much as you do. So make sure you're caring about your money and you're not just taking the advice from financial advisor or a financial guru or personal finance blogs like we run. Make sure you're looking at the information and thinking about it critically, and once you start doing that, you'll be in a better place already.
Miranda, what's your final word on financial gurus?
I just like the idea of learning from lots of different sources and seeing what they say, and then sort of taking bits and pieces depending on where you're at. And I think you can find something valuable in almost anything that anyone has out there on money. And so I think just getting out there and not getting stuck in a rut and thinking that one person is going to have all of the answers to your personal finance mysteries. just get out there and look and realize that you probably need to get information from different sources so that you have more information and you can make a better informed decision for yourself.
And Joe, if you'll close up this part of the show with your final word on financial gurus.
Instead of trying to have a financial guru take the responsibility for your retirement, your goals, take your own goals. Start with your own goals and take control of your own future, and then look for gurus that will help you get what those specific goals are. So instead of randomly finding people that, because you're flipping channels on the TV because you can't find the Wheel of Fortune, start with what you want, and then pick a guru who's done it, who's been there, and then gurus can be fantastic.
Joe, thank you again for joining us. It's great to have you on the show. For, let's say, the handful of people out there that aren't already listening to the Stacking Benjamins podcast.
Oh, man.
There's got to be like 5 people somewhere, right?
Got to be.
You got everybody else. Tell our audience a little bit about Stacking Benjamins and what you do online.
We are a magazine-style podcast, meaning that we have lots of segments to our show. We have guests on. I mentioned David Bach's been on. Rick Edelman's been on. Austin Kleon's about to be on, who I really love. Love Austin Kleon. Don Hahn from Disney has been on. So we have some quirky guests. The guy that drove across the United States illegally from New York to L.A. in the shortest amount of time, he broke the Cannonball Run record. That dude's been on.
Nice.
So we try to have some quirky people. But besides that, it's an event-driven podcast. We go 3 days a week, and we're usually talking about current events and financial planning. And for people to think that financial planning is the same all the time, there's always new legislation or new topics or new articles that people have written that we find interesting, and we try to have discussions about. So very ADD show. And in terms of this topic, I've actually written a white paper all about this topic. It keeps getting bigger and bigger, so it's pretty close to an ebook now. I think it's 25 pages, but you can find that at stackingbenjamins.com. If you just go down the right side column, you'll see it and click on it, and you can get one for free.
We'll make sure that we link to that in our show notes so that our audience can have easy access to it, so that there'll be no scrolling involved or very minimal.
And thanks for having me, guys. This was a blast.
Thanks again for coming on our show, Joe. It's always a blast to talk to you. And for everybody out there, thank you so much for watching and listening. And until next week, be good with your money. Good night.
Thanks for joining us on the Money Mastermind Show. Get more information at moneymastermindshow.com. Don't forget to subscribe to the show on iTunes and YouTube, and follow us on Google+.